Hello, everyone. Thank you so much for joining me. And who am I? I'm Alex Ward, the broker owner of Maxwell Devonshire Realty, the 2022 Broker Manager of the Year. And I have the absolute pleasure of being joined by rock star herself, Linda May Tomko, home financing advisor with ScotiaBank, who is here today to talk to us about one of the five C's of credit. And this time it's capacity. And what does capacity actually mean in the world of mortgages? And how does it impact your ability to get qualified? Linda May, thank you so much for joining us, and the floor is yours.
Hello, everyone. I hope everyone had a wonderful weekend of -40 and our vehicles not being able to start, so being stuck in our houses. I have kids in hockey, so I unfortunately did have to go out at -40. So capacity is one of the five C's of credit, which we have been kind of rolling down that train for the last couple weeks. What capacity actually means is it's debt to income ratio. So it's what your affordability level is. You may think your affordability level is different than what the institutions think it is. We do have a max that we can lend at. And it depends on whether your mortgage is insured or uninsured. And what that would mean is whether you're putting less than 20% down or whether you're putting 20% and more down. If you're putting, the less than 20%, we have a maximum that we can lend at, and that is we cannot go above that. So the insurers will not even look at the application if it is over and above the debt servicing number. You may hear things thrown around like TDS and GDS. TDS just stands for total debt servicing. And GDS is gross debt servicing. So total debt servicing would be all of your debt combined, including the new property that you're purchasing. Gross debt servicing would be your new property that you're purchasing, as well as heating and taxes. And those numbers, so for total debt servicing, if it's an insured mortgage, we would need to be below the 44%. And gross debt servicing needs to be below 39. Now, it does get a little bit more complicated if your beacon score is struggling and below that 680 mark. Those numbers may come down slightly, which is why the first rule of credit is so important to keep your credit score up high, and make sure your debts are paid, because you do qualify for more if that is the case. Now, if your mortgage is a conventional mortgage, meaning that you're putting 20% down or more, those numbers, we can relax those slightly. Now, we still have a baseline that we do need to go by, but we can get exceptions on those numbers. So even go past that 44%. Of course, if your credit is good. If it's not good or struggling, then we are restricted to that 44% as well. So I hope that was helpful for everybody. If you ever have any questions regarding capacity, credit, or any of the other five C's of credit, please reach out to me. I'm available pretty much all the time on my cell phone.
Yeah, to test, she is phenomenal. You definitely can reach out, so make sure that you do. And total debt servicing and gross debt servicing are incredibly important. And so that's why you want to speak out to a professional to ensure that you're actually using the right rate too when you're trying to calculate what your total debt servicing and gross debt servicing is. So I'm Alex Ward, broker owner of Maxwell Devonshire Realty. Make sure you hit those like and subscribe buttons so you can be updated on all of our amazing content. And thank you so much for Linda May Tomko, home financing advisor with ScotiaBank, for coming here today to explaining what one of the five C's of credit is. And stay tuned, because guess what? There's four more. So we'll talk to you all later. See ya.
Have a good day.